Ladies and gentlemen, volatility finally struck last week. And when it struck fierce and fast and huge. Now, as the definition of volatility is, that is actually shares move very sharply, up or down. Doesn't mean it's just all down in a very short period of time. It catches you by surprise. That's the definition of volatility. Well, is it something for you to be fearful? No, man, ladies and gentlemen, exactly what we've shared in our GCP Global Investment class. Always be prepared for volatility. And because we have been warning about, we have made our money from that, let me just share with you essentially in this week's video two particular variables which we are most concerned about. One is the VIX index, and two, the yen carry trade. Because an understanding of these two variables will actually help you, the investor, to be able to know when to actually get back to the market if unfortunately you're stuck in the market, or be buying big if you know that the bottom is. This is a chart of the VIX, ladies and gentlemen. You notice that it's only 3 times in the history of the stock market that the VIX has gone up above 65 times, the 65. And essentially, the only times, were during the global financial crisis. That was in 2008, 2009. And then the second time was COVID-19. And the third time happened just last week. What does it mean, therefore, ladies and gentlemen? Now, when essentially the volatility index raised up to 65 in a very short period of time, it basically means all panic, all hell's breaks loose. But as interesting as it has raised up, you notice that in 3 days, the VIX index of volatility came collapsing down. So volatility, that has actually raised up to 65 in the beginning of the week, fell down to as much as below 25 by the end of the week. What does it mean? Ladies and gentlemen, let me give you the statistics. Now, the whole idea in understanding markets is to have a good perspective of historical. There have been 9 occurrences since 1990 that volatility has actually shot up the supply and gone down to 25 in a short period of time. And when that happens, to be exact, 9 out of the 10 times, 50% of the time, the bottom of the market was seen very shortly. Now, hopefully this time around, this huge behavior of volatility index that we saw last week is portending a market bottoming in the next couple of days. Now, what do you have to do as an investor, you may ask? Well, you notice that in our posting on Facebook and LinkedIn, we have actually mentioned that previously we have been calling for a triple bottom on the REITs market, real estate investment trust, as you can see from this particular chart, which again represented in our last investment class to GCP Global investors who are made up of index fund managers of REITs, family offices, as well as high net worth individuals. We actually have made a call that the bottom of REITs, have been seen, because after 2.5 years of severe market correction, it's about there. And it actually resides within this particular variable, which is the 10-year bond yield. And you can see the 10-year bond yield has raised down to below 4% last week as the crisis sets in. And as the crisis stabilized towards the end of the week, you notice that the 10-year bond yield raised back from 3.79 to below 4%. That's at 3.95%. I think one of the linchpin in holding and knowing whether the market will stabilize further is this 10. And the next thing, ladies and gentlemen, that you should understand is the yen carry trade. Now, there have been many comments about basically the yen carry trade and to what extent it will unravel. Let me tell you, ladies and gentlemen, that the yen carry trade will not unravel unless the yen stop appreciating. Now, for the longest period of time, ladies and gentlemen, in my 35 years of investment experience, first as Singapore's youngest head of research, as well as actually then being the head of institutional funds, in various stockbroking houses before I retired in 2009. Let me tell you that investors, fund managers, and hedge fund managers will gravitate towards a cheaper, slowly depreciating currency, the yen in the case of the yen for the last 20 years. And previously, before that, it was a Deutschmark, as well as actually the Swiss franc, which are stable, offering cheap rates to borrow. Because when you borrow at this cheap rates, you actually use it for, say, investment, say in the US. Like in this case, in the last 2.5 years, where interest rates on the up climb, it was very clear to me, even as an investor, that if you borrow at cheap yen below 0.5%, and then you actually put in even the safest of investments in the US, that is fixed deposit. That is actually, you're getting 5.5% yield. Ladies and gentlemen, you're getting 5% return. So for every $1 million that you borrow, you make $50,000 in terms of interest, not including exchange gains to be made after paying off your yen. Why not? Why not do this? It's something that we have encouraged our GCP Global investors to do it. The only thing is that when it unravels, as you saw last week, because of the BOJ um, spokesmen have actually upped the interest rates in Japan now, and the fears, really, it's more the fears of more interest rate increases in BOJ by BOJ that actually cause the carry trade to unravel. But in this instance, ladies and gentlemen, it's not something that is really that you need to be very smart to understand. Because look at the chart, ladies and gentlemen. Since after COVID, you notice that essentially all the central banks in the world, including the very top one, Bank of New Zealand, Federal Reserve of the US, Bank of England, and Bank of Canada, have all up interest rates. The only one, the last one, as you can see in the red box there, is Bank of Japan. What did they do? They did nothing, because basically they were just afraid that essentially the inflationary target, is not going to be hit the 2% level that they were targeting. And when inflation hits more than 2%, just a couple of months back, they still held back because they think that nascent recovery in economic cycle in Japan will actually be stopped because of that. Well, if you look at this chart of the yen carry trade, you can see essentially it's very profitable to borrowing in yen. Now, let me tell you, going forward, ladies and gentlemen, what do I think? Well, if I may, I just want to tell you that having been through so many crises, and many a times we have made a lot of money from crisis, and that's why you notice that in our interview on 9th of April 2017, we have mentioned that in times of crisis like we saw last week, you should be betting big. And of course, you can bet big if you're prepared for it. And that's what we do in our GCP Global Investment Classes. So where are we now, ladies and gentlemen, you may ask? Well, for REIT investors or real estate investment trust investors, you notice that these are good news because essentially the turmoil is pointing almost to a clear 50 basis points in September by the Federal Reserve, possibly 1% cut in November meeting and December meeting, which basically sets for almost a 75 basis or 100 basis points interest rate cut. Now you can see that the REITs essentially is what we have highlighted in our last class. As you can see on this table, the likes of Capital Land, Mall Trust, Capital Land centers have started to recover. Some, like for example, ESR logos, has actually not recovered, but does it actually present a good buying opportunity? Well, it's something that we're going to talk about in detail in our next investment class on the 14th of September. And as per usual, do actually sign up quickly because it actually allows you to enjoy the early bird special. So as usual, ladies and gentlemen, as we have said in our posting on LinkedIn as well as Facebook, never waste a crisis. Make money during a crisis. How to make money on it? Because you have well prepared for it. And how to be prepared for it? Well, we have our GCP Global Investment classes to prepare you for that. So do sign up and enjoy, and hope to see you on the 14th of September. Do enjoy this week's video, and next week we'll talk further of and to what extent markets basically stabilize and which are the opportunities for the tech, pharmaceutical, luxury stocks, for example. So till then, give us a notch and a thumbs up for our video, subscribe and enjoy.